Welcome back to the Discount Property Investor Podcast. Our mission is to share what we have learned from our experience and the experience of others to help you make more money investing like a pro. We want to teach you how to create wealth by investing in real estate the Discount Property Investor way. To jumpstart your real estate investing career, visit freewholesalecourse.com, the most complete free course on wholesaling real estate ever. Thanks for tuning in.
All right, guys, welcome back to another episode of the Discount Property Investor. And today I have an amazing guest, Carl Fischer. Carl is with CamaPlan and CamaPlan.com. But additionally, Carl has been investing in real estate for over 40 years. And I'm really excited to be bringing Carl on today because CamaPlan is a self-directed IRA company that helps you avoid paying taxes, defer, deter, avoid, however you want to look at it. And Carl's the man. He's the pro. So Carl, welcome to the show. Thank you so much for coming on today. How you doing, man?
I'm doing great, Dave. How about yourself?
Awesome. I'm doing amazing. What a great day it is today. I get to network with you. I get to spread some value to the audience. And I and the audience, we get to learn about self-directed IRAs. You're the master at this. You're the pro. You're a real estate investor as well as a principal over at CamaPlan. And I'm really just excited to dive into you to learn more about what a self-directed IRA is, why you would want one, how you can utilize it. Is it for young people? Is it for old people? Is it for men? Is it for women? Does it matter? So I'm just really, really excited to learn more, Carl. This is great.
Thanks a lot. Just keep firing the questions out there. But yeah, it's for, in my opinion, it's for every real estate investor that's out there.
Okay.
I think they all find value in it. As you said, I was a real estate investor for over 40 years. My mom and my grandparents were in it on both sides of the family. So when I learned about this, I found out that instead of buying stocks and bonds in my IRA, I could actually buy a property or lend money to someone to buy a property and hold the mortgage on it. And you can do other things like buy into private placements and precious metals and stuff like that with the self-directed IRA. You find the deals. We don't find them for you. So if you're into residential homes, single families, you go find those. If you're into multifamilies, you find them. We don't have them. We just do the paperwork so that your IRA or 401k or health savings plan can buy the house or lend money on it and become a private bank. So when I found that out and I looked at it, I said, well, if I buy this property, all the rent comes into me tax-free. My taxes are easier and I don't have to pay, the recapture of depreciation. And I don't have to pay long-term capital gains when I sell the property.
Are you able to use depreciation?
If you have a loan on the property, you're allowed to use it. If you don't have a loan on the property, then you're not.
Okay, got it. But if you do have a loan on the property and you're not having to pay tax on the income and you can depreciate it and you don't have to recapture that appreciation, that in itself is amazing.
Right. Well, as you get up there and your income tax rate goes up and up, it's better and better for you.
Yeah. Well, here, Carl, let's do this if you don't mind. Let's take a step back here. For all the people that are listening here, let's just first talk about what an IRA is. Just, high level 101. We don't have to do a deep dive by any means, not the self-directed per se, just an IRA. Let's start with that. What is an IRA?
An IRA is an individual retirement account that you can put money into, and they have some that are for individuals and some that are for businesses. And what it is it's a mechanism that the government put in place in the late 60s to help people save for their retirement because Social Security and Medicare they didn't think was going to be enough. So they said, if you start saving money and put money away, we're going to give you a break and we're not going to charge you taxes on that money until you take it out. So you'd be able to put money away, let that money grow, until you're, retirement age, 60 years old, and then you could take that money out. Now, in the late 90s, 1998, they came up with a Roth IRA that said, well, if you pay the taxes now and put that money in, when you take it out, everything you earn plus that money will be tax free, and you just take it out and you get to keep, 100,000 if that's what you pulled out this year. Where if you put it in a traditional IRA, they would tax you at, 20, 30, 40%. So if you pulled out 100, you'd only get 70,000 plus or minus, depending on what your tax rate is.
Okay,
Is
interesting.
that pretty clear?
No, that's very clear. So that's what the IRA is. Now, what is self-directed IRA? What does that mean?
Self-directed is a name that has been tagged to people like myself that allows you, most people take their IRAs and their 401ks and they put them in stocks and bonds, right? And what we do is we allow people to, quote, self-direct into alternative assets, such as real estate, notes, mortgages, etc.
Precious metals, could be crypto, could be lending to, a third party or something like that. Now, when you're self-directing, though, there has to be arm's length, right? You can't lend it to your spouse or yourself or your business, right?
What you're talking about is disqualified people, yourself, any of your businesses, your spouse, your kids, your
but it could be it could easily be a friend.
It could easily be a friend. It can be a brother. It can be a cousin. It can be an aunt.
Just not the immediate family.
Just not the immediate family, and not any of your fiduciaries.
So why would somebody want self-directed versus, and this is, I know the answer obviously, but I'm just wanting to make sure the audience here is aware, why would somebody want self-directed? I guess A, it probably gives them a lot more options, and B, it gives them a lot more control, right? What am I missing here?
That's the two main ones. The other one is it adds diversity to your portfolio, right? I'm not saying you can't have stocks and bonds, but like I said, my DNA has real estate in it. I'm not good at stocks or bonds. I was up at 3 o'clock in the morning, 25 years ago, and I bought some of that, red, green, yellow software that you could buy stocks and bonds with. And it didn't help me. I felt like I could do blackjack in Atlantic City.
Just as efficiently, right?
Yeah,
I love
exactly.
it. So when you're self-directing, you get more options, you get more control. Really, when you have an IRA or a 401k and it's through, let's say, your employer, right? You have very few options, right? You basically get to pick your risk tolerance, and they typically give you maybe somewhere between 3 and 5 options there. And then they do all the work for you, which, isn't necessarily a bad thing. But you have very, very little control. You have very, very little options. Again, maybe 3 to 5, right?
Yeah.
And when you do have the self-directed IRA, I believe, and again, you're the pro here, correct me if I'm wrong, but there's multiple different types, right? There's IRAs, there's self-directed IRAs where, the individual, the client, can actually have checkbook control. Or there's the option where the fiduciary, which in this case would be you and or CamaPlan, can actually help place those funds at your discretion, right? Am I right on that?
Well, we don't recommend the checkbook IRA because the IRS has pretty much targeted them for the past decade. So we don't recommend that. We do have clients that still use it and they have control of that. But even, I don't even use the word fiduciary, because you could have a checkbook IRA and then go buy the house next door to you, or you could not have a checkbook LLC IRA and then just tell CamaPlan, hey, I'm buying the house next door, and then we sign for the IRA. Or if it's a building downtown, right? Or if it's farmland, out west. So it just depends on what people feel good with and where they think it is. If it's self-storage, if it's, commercial, residential. So all of those things come into it, but you get to pick what's good. And a lot of people feel that, buying certain properties and spreading it to different classes is more diversification in the real estate world, because I do very little in the stock market. I'll tell you that right now. And when you're talking about those IRAs, there's, company IRAs where you can put up to $60,000 in them. Personal IRAs, you're allowed to put 6,000 or 7,000 in them based on how old you are. The older you are, the more you get to put in.
And how much how much income you've created that year too. Isn't there limits on like the Roth per se?
Sometimes there is, yes, there is limits on the Roth, and there's a
you make too much money, they don't even let you contribute some of the time.
Correct, but you can always contribute to a traditional IRA. It won't
And then
always
roll it over.
Yeah, and it won't always be deductible, but then you can convert it to a Roth. And that's
Nice.
what a lot
So there's
of
always loopholes here. That's the thing about the tax code is there's like 75,000 roughly pages of tax code in the federal IRS tax code. And there's only like 2 or 3 pages that tell you when, where, and how to pay. The rest of it is just ways to avoid, deter. It's just amazing. It's amazing.
Yeah, well,
So
yeah, they don't ever really cut stuff. They just keep adding to it,
they keep adding to it. It's amazing how complex. I mean, it's just crazy. It's unbelievable. Unbelievable.
Well,
but anyway, these self-directed IRAs are so powerful because, again, it gives you more control and it gives you more options. It helps you pay less in taxes. It helps you build wealth.
Yeah, it makes your returns on the property, a lot better when you don't have to pay taxes on it. And I mean, one of the things that I liked about it is, with my properties, I lower the price because I want the best tenants. So I'll probably take a little bit less on rent than in the neighborhood, because I want the best tenant. And when you have a lower rent, you can do that, but I don't pay any taxes on it. So, it's great. So there are other, what I'll call side benefits to it, as well as just increasing your net worth.
Man, that's amazing. And you've been investing in real estate for 40 years. Do the majority of your clients, do they use the self-directed IRA for real estate related activities? I know obviously it's going to depend on the person, but is that what you're typically seeing? Or?
Well, yeah, I think they identify a lot of times with some of the founders there. And obviously when I talk and travel and discuss this with people, I connect with a lot of real estate investors. So a third of our people will actually invest in real estate, and that's whether they're going to wholesale or they're going to do a subject to, because we're talking about discounted properties, and sometimes they'll flip or do a quick assignment of a contract, et cetera, even before the property's bought. So yeah, about 30% buy actual real estate, about 30% will do loans on real estate, and then there's another 30% of those people will get into private placements or funds or LLCs. Sure. And 50%.
And those are typically real estate PPMs anyway, private placements. So,
right.
So you're saying 90% of people that you're working with are some way, shape, or form doing something with real estate. They're either buying it, they're lending on it or for it, or they're buying into some sort of private placement PPM to get a small slice of a big pie.
Sure. There's a lot of busy people, right? Dentists and doctors and mailmen are out all day and they can't do the private lending. So they might get in a private lending fund, or they might get into a multi-unit commercial apartment building, through a fund or through an LLC.
Man, it's amazing that it's that high. But I mean, that's the whole purpose though, is because anybody that has a 401k or an IRA, regardless if it's through your employer or not, you're just so limited. In real estate, lending, private placement. Those 3 options aren't options.
Well,
typical IRA or 401k that's not self-directed. Am I right?
You're right, but there are some companies that will give people that option. They'll have what the company has, like Schwab or Vanguard, but then they'll say you can also use CamaPlan as a self-directed IRA company, but you're on your own. And some will pick up our fees, and some will say to client, you have to pay the fees there. So it
I love
depends.
it. So, Carl, let me ask you this. I got a couple questions, and these are going to be, personal questions for the most part. So I'm a full-time real estate investor. I've been investing for about 18 years, but I've been full-time for 8. And my business does a lot of wholesaling. We do a lot of rental purchase, and we use the BRRRR method to buy, rehab, rent, refinance, repeat, so we can acquire assets with little to no money. We also do a couple fix and flips from time to time. We usually have 1 or 2 going at any given time. And then we'll do a little bit of creative here and there. So the question is that my full-time job and gig and business is real estate related. So if I wanted to do, let's say a wholesale deal, and I wanted to do it in my Roth self-directed IRA, self-directed Roth IRA, am I breaking any rules or laws or anything like that by doing 1 or 2 or a couple in that? Because again, that is my business, right? Isn't this really designed more so for people that aren't doing that as a business, to just have it as because it's supposed to be passive, isn't it?
It's supposed to be passive. It's supposed to be, a long-term investment when they're doing it.
But a wholesale assignment is not long-term.
No, you're right.
And that's not passive either, in my opinion. You got to make sure all your ducks are in a row.
That's right. So in that case, it might be that you're running a business, especially, depending on how many of them that you do. If you intended to hold the property, as I did in, like 2007, and then I put it up for rent, and somebody asked me if they could buy it, and they were like going to give me, I think, $100,000 more than I bought it for, in like 3 weeks. I said, all right, why rent it when I can get this 100,000? So I flipped it. But my intent going in was to hold it, and that's where it comes in. But even if you do a business, you can do that. There's no doubt about it. But you may have to pay a tax, and it's called unrelated business income tax. And you can discuss that with your accountant, depending.
Okay, good to know. Good to know. So it's not. So I've done a couple, but I've been very reluctant to do more because I don't. Again, here's the deal. I don't know how it all operates. You obviously do. You're the man. So you'd be the guy that I would need to talk to about what
Sure.
is black and white versus gray, because I obviously don't want to be getting audited and being that gray too much, of course.
Yeah.
So,
but if that's all you do, then you can see it makes it easier for the IRS to look at it. But let's say you're holding three properties, and you've held them for 1, 3, and 9 years or whatever, and then one comes along and you flip it. You said, yeah, it didn't meet my criteria. I ended up flipping it. I want to have the buy and hold. Now I'm a buy and hold guy, because that's just my nature, because moving property is a job. It's a business, and I want more, quote, passive. Even holding property isn't that passive, but you can get a management people to take the brunt of it.
yeah, true.
So,
Okay. Yeah. And I wasn't arguing by any means. Don't get me wrong.
yeah, no.
I was just curious because that's
that's
just a personal question that I have, because I would like to do more things in my IRA, but my business buys and sells 1 or 2 houses a week on average. We've been doing that for about 5 years. So it's like, that's my business. I get that if I was a doctor or, a lawyer or even a trash truck driver, it's not the real estate business, right?
No,
where
but
if you do that, it would be a lot less gray.
Yeah, but think about that as your business, and that's earned income, I'm assuming, the way you're doing it. So you can actually have a 401k for your company and put $60,000 away for yourself out of that money that you could put into, a buy and hold, or lend it out, become a mini bank, lend it to somebody, else out there. So there's a lot of options there, and you're going to find other people that are in your situation. And maybe what you do is you invest it into their company, or you invest it into a couple of their deals that are there, or you buy one, that you find off the shelf in your IRA.
Nice. Yeah, I have a friend here in town, and I think he's turning 59 this year. So I just saw one of his posts recently. He was all excited, but he's got between 2 and 3 million in his Roth self-directed IRA, or self-directed Roth IRA. And I'm always so fascinated by that. and I got a little bit of money in mine, but I don't have that much money, of course, in it. But I need to start utilizing it more and more. So I'm really glad that we're talking today because,
Well, your friend is good with a couple million, but last November they were talking about Peter Thiel with a couple billion.
Yeah, I know.
Right?
That's wild, right? And I know
right.
how. And I went to a real estate event a couple, maybe 8-10 months ago, and I learned some really cool things where you can actually, own parts of your business or the majority of your business in your,
401k.
self-directed IRA or Roth IRA or whatever it may be. And then, you can grow it like crazy. Yeah, 2 to 3 million is probably not as big of a deal as 2 to 3 billion. Let's be honest.
Both are nice though.
Both are nice. That is exactly right. Awesome,
and I think Mitt Romney, he made the news when he was running for president because they went over his financials, and he had, something like 100 million in his IRA. So, I mean, it's out there and you can see the big wheels are doing it. I didn't invent it, but, I'll follow it when I can find something that, all the big dogs are doing. And, prior to, the 1990s, 2000, self-directed IRAs were, on the down low and nobody, you could find.
Yeah, they're much more mainstream. That's a very good point.
Yeah. Yeah. You can see an article on them now, in Bloomberg or Forbes, almost every other week.
Right. Well, Carl, tell me this, man. What does it cost the average individual? And I know it may vary, obviously, depending on a lot of factors here, but what does it cost the average individual to work with CamaPlan, let's say, to set themselves up a self-directed IRA?
That's a great question. The first thing is it's $50 to open up an account, and that's all you pay.
So barriers to entry are tiny.
Yes, very tiny. The second thing is we ask people to open up their accounts if they're planning on doing real estate right away, and then put $5,000 in there at a minimum, so that when they come across a property, they have the down money to do that, because getting money into it, unless it's a contribution, transferring it from Schwab can take some time. And just put a little bit of money in there. If you open up an account and have, $4,000 or $5,000 in there, we don't charge you anything until you find a deal.
Awesome. Okay.
And
so
I think we're the only company that does that. And the reason is I don't want people rushing to get a deal, because a lot of our competitors will charge you, $300 or something every year.
Yeah, Rob. Yeah, I think I pay quarterly for a different company, but I'm really interested in maybe moving over to you guys at this point too. So seems like
we're a lot faster too.
A lot faster. Definitely have this stuff figured out, which is really, really cool. So what would be
we'd be glad to have you.
Well, I appreciate that. What's the typical client look like, if you don't mind me asking?
Well, here's another thing. We have two ways of charging fees, and one is based on the value of your account, and the other one is based on the number of assets in your account.
Oh, nice. So you got some options there. That's great.
Yeah. So if you let's say you're in the asset category. If you buy $100,000 house, it's going to cost you $275 a year.
It's nothing.
Well, but if you buy $1 million house, it's still going to cost you $275 a year.
Oh, I like that. That's
because
cool.
It doesn't change. Well, you have to understand that my sister and I founded this company, and we're in real estate and we're investors. So we set it up so that it would work for investors. And that's one of our taglines: for investors, by investors. So we said, how would we like to have it run for us? And
Sure.
that's how it is. So it's, but then if you need a cashier's check or an overnight, we have fees for that. But your annual fee is $275 a year. And when you buy a property and you're processing it, it's about $150 a year, or each time you buy.
So the fees are tiny. I mean, these are low.
Yes, I say they're insignificant, right?
They are. I mean, let's be honest. I spent more than that on dinner last night. Come on, man. That's nothing.
Yeah, exactly. People spend more on their cell phone bill.
Yeah, on a cell phone bill once a month.
Yeah.
And that's not
Yeah.
even, and that's not even a monthly fee. That's an annual fee. So,
Yeah.
wow.
And that's the other thing too, is we basically charge annually for this stuff
Nice. But either way, it's
versus every quarter.
extremely low. Well, Carl, this has been amazing. I've learned several things, and this has been really, really great. How can people reach you? Is CamaPlan, that's CAMA plan, PLAN.com. Is that the best place to connect, to learn more, to maybe even set up an appointment to talk with you guys further about how you could work with them and help them?
Yep. One, you can go to that website. It's award winning. You can learn a lot. You can watch it.
Great site, by the way. Very, very nice and clean.
You can go to the Academy and listen to webinars and podcasts. We have a podcast series. Maybe I can get you to break some time out to it. Road to Financial Freedom.
Be happy to.
We have downloadable products that you can grab depending on what type of real estate or what type of investing you do. Like we do have people that do precious metals, and our precious metals is you actually own the metal and not just an ETF.
Yeah, I like that much better.
Yeah, I mean, as one person said, when you're on a sinking ship, do you want a picture of a lifeboat?
Or do you want the boat? 100%. I never understood I guess the ETF makes sense if you're trying to move $50 million in it, because that's going to be a lot of gold bars, right? But if you're just doing 20 grand, 2 grand, 5 grand, maybe even 100 or 200 grand, you can buy the metals, right? You can own them and hold them and
Yeah, we keep them in a depository, but I'm just saying that that's some of the diversity that you have out there, and we'll help with that stuff. But look at that. Look at all those types of things on our website. And there's a place where you can, request a consult. All of our consults are free, and you can bring in your accountant, attorney, spouse, whoever you use as an advisor, and we'll be glad to answer all their questions at one time. We don't want anybody doing anything, if they don't feel comfortable with it. And we have a due diligence page right on our YCAM. I think you see it there when you pulled it up earlier under YCAM. Mm-hmm. And that answers a lot of the questions that people have said about due diligence. So just check us out just like you would any other project. But we've been in business for 20 years, and I think we're probably one of the best companies out there for service.
Are you serving all 50 states?
We're serving all 50 states, and we have some citizens in overseas in the military, etc.
Holy cow, this is great. Carl, this is awesome. Thank you so much for coming on the show today. Guys, check out CamaPlan.com. That's CamaPlan.com. Carl is the principal along with his sister Maggie, and the founder, of course, as well. Carl, his last name is Fischer. If you want to look up Carl for any reason, it's Carl, and Fischer is spelled Fischer. And this has been an amazing episode. Carl, thank you so much for coming on. Any parting words that you can give the audience, on our way out here today?
I would just tell them to be thinking about subject twos. I think the economy is changing. I see foreclosures are picking up, so you might be able to pick up some properties for just the loan balance on them moving forward here, I would assume in the next.
And not only that, but if somebody's locked in below 4% and current, I think right now we're at 5.8, maybe even 6. Subject to allows you to utilize those low rates. And I want to build on that. And 90% of loans are assumable. So even if the seller doesn't like the subject to aspect of it, you can assume the loan. Now you're going to have to qualify, of course, but you can assume the loan and stay with the current rate, stay with the current amortization, and acquire that piece of real estate or that asset that way as well too. So Carl, excellent advice. And man, you are a wealth of knowledge. It has been a pleasure getting to talk with you today and network with you. And I learned a few things, and I know the audience learned a ton. And we're just really grateful to have you here today, and, really grateful for your time. So I just want to say thanks on behalf of, not only myself, but the entire audience. Thank you so much for coming on the show and providing some value. And guys, if you are listening and you want to learn more, go to CamaPlan.com. You can book a call. They offer strategy sessions and phone consultations. Not only do they do IRAs, they do the self-directed IRAs, they do the health savings accounts, which are really, really cool tools as well. And these guys are the experts. They're the pros.
Yep, 401ks as well. So
401ks too, all the above, man. This is great. Well, Carl, thank you so much for coming on. And guys, don't forget, you can learn more. You can book a free consultation over at CamaPlan.com. That's CamaPlan.com. Carl, one last question. Where'd you guys come up with the name? What's that mean?
We used to call it Central Area Mid-Atlantic because that was the region we focused on. But in reality, it's
acronym.
Yeah. But in reality, it's the first two initials of my name and Maggie's.
Oh, there you go. I love it. CamaPlan.com, a different way to invest. It's going to give you guys more control. It's going to give you more options. It's going to save you money. It's going to make you money. The fees are low, and you're dealing with professionals that not only are, in the finance industry, but are also real estate investors. So, I mean, and like a pretty good thing if you ask me.
And you get to use your knowledge and your expertise.
That's exactly right.
And what you know and understand, which I think is key.
100%. Well, Carl, thank you so much for coming on today. Guys, don't forget, check it out. They offer a lot of really, really good resources and tools. They even have a knowledge base over on their website where you can learn more. And with that, we're going to be signing off, guys. Don't forget, though, you make your money when you buy. You get paid when you sell. So we got to make sure that we're buying deals and we're getting those discounted properties. And with that, we'll be signing off. Carl, thanks again for coming on today. I'm looking forward to connecting with you further.
Appreciate it, Dave. Have a good day.
Thanks, Carl. Signing off, guys.
Thanks for listening to the Discount Property Investor Podcast. If you enjoyed this episode, please like, share, and subscribe to help us reach a wider audience. To jumpstart your real estate investing career, visit freewholesalecourse.com, the most complete free course on wholesaling real estate ever. We would also appreciate it if you left us a review on iTunes or Stitcher. Thank you in advance for your support. And remember, you make your money when you buy, you get paid when you sell. Now let's go build some wealth.